like to set the state of play. So we do have that. You got the month end for the markets. The S&P is flat. Wondering whether FAANG did enough this week, at least the ones that have reported, along with Microsoft, to reignite that trade. You've got the J&J vaccine data we're all sort of poring over and trying to figure out what happens next there. So, Pete, where does this leave us?
Well, I think at some point in time, we've been talking about this for a while now, Scott. When are we going to see this pullback that everybody seems to be talking about, including myself, after we've had this run? It was just a couple days ago where we were still hitting all-time highs. So we've had this incredible run to the upside. Everybody's looking for some sort of a pullback, and maybe that's part of the problem. But I do think that at some point in time we will. As a matter of fact, I've tightened up a little bit of what I'm doing, but I probably need to ease back on some of the equities that I still do own. I've cut back some, but I've started to get a little bit more aggressive with what I do in terms of the calls that I sell against my long stock positions. As far as the option positions themselves, I will continue to just trade like a madman because we are in a frenzy of a market right now in that world. We traded 60 million contracts 2 days ago, 50 million contracts yesterday. The pace that we're on right now for January, which is just about over, is somewhere close to 45 million contracts a day. Just to put some perspective onto that, in previous years, we've averaged 20 million per day. Last year, we averaged 30 million per day. So we are really at extraordinary levels, and it's been a great opportunity in the derivatives markets, but you better be educated and understand all of the risks, because this is not a joke. This is something that's very, very serious, and you have to understand the risks when you put on some of these option positions.
Hey, Pete, give me an idea. When you say, maybe you need to be a little more aggressive in taking down some of your equity exposure, give me an idea of some of the moves that you've made, or at least give our viewers an idea and what sort of that represents of your point of view right now.
Sure. Well, I've got quite a few different stocks that I am long, Scott, in my portfolio. And what I've decided to do to be a little bit more aggressive, because I haven't figured out which ones specifically that I need to lighten up on. I still like these stocks. I'm just wondering which ones might have the most pullback potential because of maybe the markets getting sold off like I would expect, which would be somewhere between a 5 and a 10% maybe pullback. So if we do see something like that, I want to be prepared for it. The only preparation that I've done is the aggressive nature of how I'm approaching selling calls on top of the option of the stocks. Normally, if I own a stock, for instance, that's trading at $50, I would normally be trading and selling an option maybe a month out that's the 55 strike call and trying to get enough of that I can. Now I'm going right on top of these stocks. I'm literally trading. If the stock's trading 50, I'm selling the 50s. If I'm looking even in Apple's, great example, even with Apple, when it was trading about $1.40, I was selling the 140 strike call. So I've been getting a little bit more aggressive. Normally, I'd be trading something further out of the money. So it's just a way to try to tighten things up, get a little bit more of juice, so to speak, so I have a little bit more room to the downside when if we'd see a pullback.
I hear you. And we'll go through some of the names specifically as we go through the show today. I want to try and get through a lot of names today for our viewers. Carrie, so where does this leave us? Kramer, calling in earlier, said don't read too much into the rest of the market from GameStop. The numbers have been very good. He's talking about earnings. Chris Ailman, the CalSTRS CIO, says it reminds him of 99 all over again. A wake-up call. A crowd is okay. A swarm is dangerous, referring to how some of GameStop has been traded. Where does all this leave us now with earnings really going to get hot and heavy next week?
Yeah, well, it's interesting, Scott. We had seen a little shift back toward the growth stocks. So if you looked a week ago, it seemed as if Apple, Microsoft, Facebook, those names, Netflix, they were really gaining some traction. They reported excellent earnings. If you look at the numbers, Microsoft revenues up over 30%, Apple and Facebook in the 21-24% range, beat on estimates of earnings and on revenues in all sectors, really. So then what happened? We had this enormous short squeeze, and the FAANGs, to some extent, are a source of funds. They become the virtual money market fund from which traders can get assets quickly. So I think they suffered this week, despite their good earnings, from liquidity pulls in order to cover the shorts.
Oh, you think that?
And we don't have enough evidence.
But you think that's why? You think that's why? Like let's say an Apple absolutely knocks the cover off the ball with their earnings, right? The most profitable quarter ever. Facebook does the same for the most part, and then those stocks have traded down on the week. Both are negative for the week. So you're suggesting there was a direct correlation to what we were witnessing with GameStop and how some of those other names have traded.
I think it's possible. I mean, I don't know that. But if you're looking at stocks that a few months ago were 25% of the S&P, I mean, there's still an enormous weight. Apple is up, yeah, I mean, at 7+% of the S&P. So it makes sense to me that if you need something to cover, you just sell a few shares of Apple, Microsoft, Amazon, Google. You know, there's the way you cover it. That's where you get the $2 billion fast. So I was very pleased with those earnings. We thought that they were excellent. And by and large, what we've seen so far, even, you know, a name like Sherwin-Williams, great numbers. And we think that that should continue. It's not as if we have no risks in the market. We're up at 22 times earnings. And we have to have good numbers. The market expects good numbers, but they've hit the numbers. They've raised estimates. And with the good vaccine news, I mean, that J&J number was good. Well, maybe talk about it later, but we're running toward the point where we can start to produce more vaccines for more Americans. And that's the only way that we get to the other side of the road. We can't, you know, I can't obviously reopen.